Hi all, this is Ashish Kyal here. Welcome again to Elliott Web News channel by wavestrategy.com. And it has been a very interesting moves that has been happening in the market, not now, but it has been, I think, more than 3 weeks. And we have not seen a trending move emerging on any direction. In the last webinar, if you remember, I have talked about the key levels that you have to keep a watch on. Nifty has been simply guiding around 10,980 on the upside as the resistance, and the support is coming around 10,620 odd levels. Within this big range, there has been a lot of volatile moves on either of the direction. The important thing that you might have observed is whenever Nifty approaches near the upper end of the range, above 920, 930, it looks like it is about to give a positive breakout, and you might want to go long there. And as soon as it reverses back towards 10,750, 800, it is reaching 750, 800 levels, you think it's going to give a negative breakout and probably you might be shorting at those levels. But what is happening is every time there is a sharp move on the one side, it equally reverses back sharply on the other side without giving any meaningful trend. That is the nature of the market that we have been witnessing for almost 3 weeks now. And it has been a very, very difficult trading environment for someone who is a positional trader, not for an intraday trader. Because on intraday, if you adopt certain techniques and methods, you can still make a good amount of money, because volatility, which is a key for intraday trading, is very high on an intraday basis. But from the positional swing trading perspective, these kind of movements are not conducive. So it is like if you want to always make a big run and a home run, you have to hit a home run. It's not always possible. You have to place those ones and twos and keep going. And once the trending move starts, you can then start playing for the big home runs. That is what the markets are all about right now, what is happening with the Nifty. So in today's webinar, I'm going to talk about certain methods of Elliott Wave. And along with that, I'm going to combine Ichimoku Cloud. Now, I'm sure you might be already heard of the term of Ichimoku Cloud, but never tried and applied it, because there are too many things that comes up when you apply it as an indicator. When you apply Ichimoku Cloud, you see a lot of lines, lot of colors that comes up on the chart, and you're not sure how to use that. There are multiple ways in order to use that, but I think the best way to look at any kind of a strategy or any kind of such moves is to simply do one thing: go and plot it on the chart, see how the history has performed, and based on the history of that specific index or the chart, you then forecast what's going to happen in future. It's a very simplistic way of looking at things, and that is what I'm going to talk today of how you can combine Ichimoku in order to identify a trending move, and when it's not trending, which maybe you have to use Bollinger Bands. And when you do that, when you combine these methods together, you get, along with Elliott Wave, you get a lethal forecasting ability plus a trend following system in place. So over next few minutes, I'm going to talk very, very briefly about these methods, because this is a complete independent study. Ichimoku Cloud is itself a complete independent study and requires a lot of thought processes to get into it. But I'll be discussing about how you can apply it in a simplistic way. Let me show my screen with the chart right now. If you can see the MIM broker window, I have taken a blank chart right now because I don't want to clutter with the previous indicators, so that you can start afresh. If you look at this chart, what has been, this is the daily Nifty chart. We can clearly see a strong trending move that emerged from 11,700 levels back towards the 10,000 on the downside, and then now we are somewhat retracing this entire down move. What is interesting is this entire down move has been so sharp and fast. The up move has retraced only 50% of that entire downtrend, and we are still struggling around a consolidation zone. As discussed in the earlier webinars, there was an expansion at the start, and now we are seeing a contraction which is happening. So this expansion followed by a contraction is a classical indication of a pattern which is known as a diametric pattern, and that is what I think we formed a diametric pattern, and probably the diametric pattern might still be ongoing, or we might be involving an X wave and again some other pattern is ongoing within the after completing the diametric pattern. Either of these scenarios I'm mentioning the daily morning research report, the financial waves short-term update, which you can refer for understanding the detailed Elliott wave counts on the diametric patterns and the bigger degree neo wave patterns, which I'm seeing on the chart. Now, when the markets are in such a huge consolidation, the first thing I'll go and do is I'll simply go and plot an indicator which is best for a consolidation or a sideways market, which is like a Bollinger Band. So if I go and plot a Bollinger Bands here, I'll get a very good feel on what is the overall range and how it's going to behave. So if you look at Bollinger Bands, this is a standard 20 Bollinger Bands I have applied. Look at the resistance on the upside. The bands have turned absolutely flat. The zone of 10,980 to 11,000 is the zone where there is so much of resistance which is coming in, and these markets have turned so many times from that zone. At the same time, if you come on the downside, 10,685 is the support level for the Bollinger Band, so 10,700 becomes crucial, and also 10,692 is the low which we have seen on 14th of January, so that becomes an important low. And that is why in this kind of a market, once the markets are near the upper end of the range and you see a negative reversal, go short. When the markets are near the lower end of the range and you see positive reversal, you go long. So in this market, in a range bound market, Bollinger Bands will work absolutely fantastic. You can apply that. And in a trending market, when you apply Elliott wave along with Ichimoku Cloud, that works extremely well. So let me remove Bollinger Bands now. But it will work very well in the sideways market and in the trending market. So I'm going to share across certain chart and apply Ichimoku here. So if you apply an Ichimoku Cloud, you will see all the colorful charts here, but don't get too overwhelmed with so much of data. You can pick up one thing at a time and try to understand if it is making sense. Now, if you look at the entire move on the downtrend when the markets were trending, you can clearly see the prices moved below the cloud. So the cloud means the green highlight area is known as the cloud. I would, for simplicity, say that the red one is known as the baseline, the blue one is known as the conversion line. Or in case you understand just the red and the blue line, that's okay. What you will observe in this entire down move, if I look at the history, I can see prices are taking very strong resistance near the cloud area, reversing back on the downside, resistance at the cloud, reversing back on the downside, which means every time it goes to the cloud, that is the area where you have to probably look forward to go short, or not exactly at the area, but once the price reverses back below the red line, that is the area where you can look forward to go short. That's one way of looking at it. Also, the other way of looking at it on when there is a crossover. So whenever there is a blue line crossing below the red one, and prices are reversing below both of these lines, it's a simple concept which you use even for moving averages. You go short probably. That is the area where you go short, you stay short all the way. So look at it. Once the consolidation started, prices came up sharply, looking like giving a positive breakout, but reversed back on the downside from the cloud, broke below the blue and the red line, and the red line crossed below the blue line, go short here itself. That's a classical indication, and you are in the trend all the way on the downside. So there were multiple opportunities to enter into the trend. At the same time, how does it help with Elliott wave count? This is wave A. It becomes very clear. Price went to the cloud, maybe that was wave B. Price again came back down, C. Went to the cloud, that was wave B. Came down, E. Went to the cloud or attempted to go on the upside, maybe F. And we completed wave G on the downside. That is a classical way of counting a neo wave pattern using an Ichimoku Cloud and Ichimoku trend lines. So wave A, B, C, D, E, F, and G. Now you know how to count using an Ichimoku, the Elliott wave pattern. Then maybe the move on the upside was slower, did not retrace much of that. So maybe what we started was an X wave. And after the X wave, which got completed maybe over here, or maybe X wave got completed here, we started again a move on the downside, which was wave A. Then again, there was an attempt to break the cloud on the upside, maybe wave B, we came down C, D, and that is how you can do the wave counting. And over here, once the trending move started, we can clearly see prices started respecting the cloud to some extent. However, right now, if you look at the overall trend of the market, it has been absolute range bound. So in a range bound market, the method, the parameters that will work well, or the indicators work well, will be Bollinger Bands, and Ichimoku can also work extremely well if you go down a little on a lower degree also, you can still apply that this method for intraday trading. So if you go down further on Ichimoku, let me go down to as low as 15 minutes chart. So if I'm looking at a 15 minutes chart, the basic method that I can use is, if I'm looking at this, I can see that price has been finding a very strong support near the blue line, and then once it comes closer to the blue line and bounces back above the high, go long. Comes closer to the blue line, bounces back above the high, go long. Comes closer to the blue line and the cloud bounces back above the high, go long. And can you see here how many multiple opportunities you got on an intraday basis for doing that? Same thing here on the downtrend. Comes closer to the blue and the red line, breaks the low, go short all the way down. So that's how brilliantly you can apply a very simple method along with that. So if you go and look at the current scenario also, we saw a move on the upside. It came down towards closer to the blue and the red line, but it didn't break the high. So buy above high was a classic setup in case it broke the high. Now it came below the cloud, below both the lines. Now wait, let it show pullback. Let's see how that pullback happens, whether it comes close to the blue and the red line and then breaks the low, go short below that, keep that high as a stop. That's a simple classical way in which you can look at an intraday chart. Maybe you can go on a 5-minute chart and try and find out if it is providing even shorter, even much lower trade setup. So the beauty of this method is it can provide you trade setups right from 5 minutes to 15 minutes. You can enter the trade. You can look at hourly chart to make out the wave counts on a bigger degree. That's the beauty of it. If every time you see in a trending move, price going to the cloud and reversing, that's the indication that a wave is terminated, next wave started, wave termination, wave starting. Now that's an innovation in this subject itself, where you are combining an Elliott wave, Neo wave with Ichimoku Cloud. So I'm going to talk about this in a much more detail and in a much more discussed manner in the upcoming training on Elliott wave, where I'll combine Elliott wave with Ichimoku Cloud and time cycles all together on 6th and 7th of April. I'm conducting this training in Mumbai at Radisson. In case you would like to register, you can simply visit the website wavestrategy.com. You can visit there. You can enroll yourself for the training. I'll just show the website how it where you can go and look at it. So if you visit the website here, if you can see my screen on the website wavestrategy.com, there is on the home page there is a banner. Let me go on the home page and share the banner. If you click on the banner itself here, it's still loading. Okay. If you click on the banner, you'll get all the details about what is the training about, which I'm going to talk on, what are the topics which is going to be covered in that training, the scope, everything, the pricing, everything. If you register before 15th of Feb, the best part is you will get it at a discounted price. At the same time, you will also get what is known as, after the discounted price, you will get free research reports till 15th of Feb. You will get free Elliott wave training links. You will get free access to Bank Nifty research report. So a lot of research report, Nifty research report. So you will get a value out of whatever you are paying till 15th of Feb, any which ways, and post that the training will be happening. You will also be getting the links to the Elliott wave, basic Elliott wave, where you can learn about basic Elliott wave. And after that, after the training, there is always an interactive sessions which you can have you can ask questions to me on Traders Forum. You can write to me and I'll be more than happy to respond back whether your accounts are right or wrong. But if you simply incorporate, whether you attend the training or doesn't attend the training, if you incorporate something as powerful as Ichimoku and Elliott wave, it can give you a lethal objective forecasting method that many have been struggling with for quite some time. So what happens is, most of the times we think whether it is going to be worthwhile or not. Trust me, I have a decade of knowledge with me, and I will be sharing all of those knowledge in those 2 days time. You will not become a veteran trader the very next day, but there will be certain tools that you can use and that can be extremely useful for you to implement and increase the accuracy of your trading. Start applying methods that are working in the markets and don't get carried away by the news or events which is there. You trust me on that. These methods are working and it's working wonderfully well. That's it from my side. I hope this will help you to ignite something to know more on Ichimoku and Elliott wave. And in case of any queries, you can always reach out to me. You can drop an email to helpdesk@wavestrategy.com, or you can write to me, or you can call me at 99204 22202. rush register now. And that's it from my side. Have a wonderful weekend. We will start seeing a trending move, but I think we might be stuck in a range for a few more days, and that's going to test the patience of the expert of the traders. Don't get carried away. If you are losing money, don't be worried. There are ways in which you can recover back and make money more. So those methods I'll be discussing on 6th and 7th of April. And see you again same time next week at 4. You can visit the website wavestrategy.com, and I'll be more than happy to assist on any kind of queries. Thank you. That's it from my side. See you again same time next week.